Welcome to the Kindle Report. In this video, I'm going to go through 10 stocks that I believe that will help you to scalp during this next 3 months. In my previous video, I discussed the probabilities of the market staying in a broad sideways trading range. All of these stocks that I chose came out of the S&P 500, the top 50, and they also had a coefficient of 0.88 or higher. Let's get into this video. Well, folks, before getting into the content, make sure that you subscribe and like these videos so the YouTube algorithms will know I'm doing a good job for you. Also, I want to alert you that the live trading room now is open and we're starting to bring in more members. We haven't really advertised, but we want you to know that it's out there. It's a combination of education, trading, and even portfolio building. You'll get access to our tools as well as many other things that you don't get watching the YouTube channel. I hope you join us. Thanks again, everyone. Remember, subscribe and like these videos. Before I get into the list of stocks, I want to go through some of the premises and the setups that I talked about in the previous video. As you may recall, we talked about the S&P being locked in this range. In the month of January, we had a range of 48.18 to 42.22. My premise is that we're going to stay within Fibonacci relationships over the next several months and waffle in between those ranges. At the moment, I do not have expectations of new highs, but this consolidation range should be erratic, therefore volatile. So when you do get profits on these stocks, or whether you're trading the indices to do this trade, you have to be quick to take profits when you get them. So make sure you have price targets. You can use the Fibonacci numbers and things that I'll talk about in the video. As you would expect, many of the stocks that you thought I would mention are the ones I'm going to mention, but there are plenty of stocks out there that would also meet this criteria. These are the ones that I researched just to give you some perspective of how to handle this. So they're Apple, Home Depot, Google, Microsoft, Pfizer, NVDA, United Health, Pepsi, Costco, and Lowe's. In this section, we'll take a look at the charts. I'm going to set up the exact ranges. I will have them on the screen so that you can write them down so you can get an idea of these monthly ranges and where the markets are likely to have rejection and support points. So let's get into that. The very first one that I will go through is Apple. You'll see the ranges here. One of the things and characteristics of what's going on, and you're going to see this on most of the charts I show you, is that the market grid has come into one of these box formations. And what that means is it locks into a square. So the next couple months will have similar ranges. As I mentioned in the video the other night, I do expect to see volatility collapse a bit, so these ranges should compress over the next couple months. In the end, we'll have some great ideas on where to trade off of, where you're buying puts or calls, or whether you're just trading the stock and taking profits or shorting. Let's go ahead and take a look at Apple. So Apple, you can see the range here from 198.38, which would actually be a new high in this, and the low of 151.18. So there's a very broad range. We're currently trading here at the 174 range, so we're between S1, R1. I would expect R2, S2 to be at least the range for the balance of February. So that would be where we would look at S2, R2, and I'm going to suggest that that's the case for most of these markets as we go forward. Home Depot has an interesting configuration. We're trading on the 10-month moving average. The PPMs are all up very big, so this is a point where we're probably looking right now at the S2, R2, just like in Apple. So I expect to see these ranges set up. So you should be able to set up a number of trades around these grid numbers that I'm showing you here. Google is next. And this has an interesting setup. When we had the big news the other day, we traded just above the RTX number, 2980. We had a high of 3030. We're currently trading right now at the 2787 level, and the 10-period moving average is 2725. So we're likely to see the support S1, possibility of an R3 in this pattern. Next stock is Microsoft. We're also seeing the same type of configuration here, the rising 10-month moving average up at 1.78. So right here at S1 around 302 is going to be substantial amount of support. 292 would be a bargain. R2 329.70 could see as high as 348 in this pattern. We should start to see this completely go into a random phase over the next couple months. Next stock will be Pfizer. Pfizer has a very unique pattern here. We have one of these bubble formations, or what I call a volatility spike. So there's a little bit wider range, but also has a rising 10-period moving average with a very strong PPM at 2.85. This suggests that the value of the R2 at 47 should be substantially supported there, and I expect to see S2, probably R1 with the possibility of R2. So all of these look like they're set up for an S2, R2 are going to be the trading ranges. NVDA is next. This is also a very unique pattern. We have a big blow up in the volatility, so the market grid is expanded. We did get an RTX sell 3 months ago, and you see we're trading down into the 10-month moving average. So look for an S1 224. We're trading 253. S1 R2 287, but these numbers will all be good pivot numbers for you to trade off of. Next stock we'll go through is United Healthcare. This has a much better controlled environment from the standpoint of what's going on with the patterns, but we are seeing the potential. We've traded S1 already, R2, so look for this to continue to be in this range, possibility of trading down to the 10-period moving average at 440, and this will also represent the trading range that will likely stay for the next couple months. This could set up actually a dragon head formation. If you're used to watching me on the channel, you'll know what that is. Next chart will be PepsiCo. Remember, these are all monthly secular trends, and what we're seeing here is that box formation again, and we did have an RTX sell signal 2 months ago, so that suggests that we're likely to see some possible upside volatility, but same thing, S2, R2 on this chart. Next chart is Costco. Like all of these charts, you'll notice that we have very strong secular uptrend. So there's going to be an upward bias and bouncing off these support levels. Right now, the 10-month moving average is 473. If you look at the market grid here, there was an RTX sell signal a couple months ago. So we're just setting up this pattern. It looks to me that a lot of these stocks that I went through others earlier, and they all had the same configuration. So it looks very likely the scenario that I'm setting up here will be what unfolds. This is the final stock, which is Lowe's. We are seeing a much narrower range here in Lowe's. What's interesting about this one is there is some upward projections for substantially higher prices. I don't know if that will come into play, but the 10-period moving average at 219 is going to be the primary demand line. So you can use a simple 10-period moving average on all these charts to get an idea of where to trade off of, especially the ones that I mentioned that are in those secular uptrends and have a rising ppm of 1.00 plus, and almost all of them do. So this is the setup. There's just a handful of stocks here that I've come up with. There are tons out there that would qualify for this trading range as we go forward. Just a couple final comments here on this video. What I tried to set up was some general expectations for these stocks, but if you use the market grid that is displayed on each one of these, you'll be able to set up a lot of trades around there, and you should be able to use some of your indicators that you're looking at, and using the Kendall report, getting market sentiment from day to day when we get to those levels. I will be discussing these levels over the next several months. When we hit them, there'll be some correlation on these stocks. As long as they are well correlated, you should be able to trade off of all of these numbers. As usual, everyone, thank you for watching. Hope you found this useful. Make sure you like and share these videos. Hit that notification bell so you know when I post my next video. Thanks again for watching.